Hi friends, have a look at my screen and you will see that this particular stock back in April 2015 used to trade at around 118 rupees level, and since then it has been hammered down, it has been beaten down like anything, and by the time December 29 came, the stock was trading at around 3 rupees level. And in fact, in the last 5 to 6 years up until August 24, if you see, the stock has never managed to cross 20 rupees of barrier. So this is one negative example of stocks that have beaten down badly and have never managed to go back or rebound back to their all-time high value of 118 rupees. But guess what? Indian stock market is full of negative stories as well as positive stories. And as an investor, we need to have both the views because each of these views will teach us something very, very important. Now, in contrast to this stock, have a look at my screen and have a look at stock number 2 here. Back in December 2021, this stock used to trade at around 1782 rupees level. This was also badly beaten down, and by the time May 22 came, it was down at around 543 level. And in fact, by the time June 2024 came, it was down to 340 level, losing almost 70 to 80% of its value. However, what happened after June 2024 for this stock is that it started to bounce back. And look at the rally that it produced. By the time December 24 came, the stock had tripled from its bottom price and had gone to 1000 level from almost 340 level here. So this is a positive story of a beaten down stock that has managed to bounce back from 340 levels to almost 1000 level. So what's the difference between these two stocks, stock 1 and stock 2? That stock 2 has managed to bounce back. So the billion-dollar question is that can we find out those beaten down stocks that have high odds to bounce back to very, very good price levels is what I really want to discuss in this video. Now, I'm not saying that my method is a 100% guaranteed method. In fact, in this entire world, nobody is going to be able to produce a method or a framework that will work 100% of times or will give you guaranteed returns. If they're telling you, they are bullshitting, they are giving you false information. But over a period of time, I have learned a lot of things about beaten down stocks. So in this video, I'm going to run you through 10 steps that I have learned over a period of time. And if you do these 10 steps, then the odds are going to be in our favor where the stock may bounce back. Again, there is nothing 100% guaranteed here, but definitely these 10 steps will remove badly beaten down stocks or fundamentally weaker beaten down stocks. That's the whole intent of creating this video. People will not even share this type of content with you even in 10,000 rupees, 20,000 rupees of paid courses. Here I'm teaching this to you absolutely free of cost. And if you like this video, the only request I have is that let me know in the comments. A simple thank you. The only other way I teach practically is using my YouTube community. If you're not yet a member, you can consider becoming a YouTube community member. Go to my channel and find the join button and be my guest. I post almost on a daily basis about stocks, mutual funds, ETFs. The feedback of this community has been excellent. You are going to learn from each other as well. With that, let's get this video started. So the first thing we are going to do is we are going to head to Screener and simply create a new screen. You will see the screen coming up, and if you are very new, I'm going to go very slow so that you understand it. So step number 1 is to find out those stocks that have been beaten down massively. How to do that? Very, very simple. Simply we are going to say high price all time here. Okay. So this will tell us what is the all time high price of the stock. Now we are going to say minus the current price. So that tells you how much it has fallen by, but definitely we want it in percentage. So what we are going to do is put the brackets here, and then we are going to say multiply this by 100 and divide by high price all the time, high price all time. So this will give us those stocks that have been hitting all time high price since 2005, which is going back to 20 years. And if we run this query here, you are going to get around 4,845 companies here. Now what we want this percentage to be at least more than 50%, right? We want a stock that has been beaten down from its all time high price by at least 50%. Now this percentage could be anything. You might go with 60%, 70% or 80%. It is your call. I'm comfortable with 50%. So I've gone with 50%. Now let's go and run this query. And if we run this query, we get around 2,467 companies that have beaten down by more than 50% from their all-time high price in last 20 years is the data that we have got here. I'm not displaying the names of these stocks here because the name of the stocks will vary depending on when you're watching this video. What I really want you to do is to learn the concept and practice it with me. Open the screener, start typing the query. Believe me, you are going to learn a lot, right? Now what we are going to do is improve this query here because this is step number 1 here. And one thing you will note here is that we do not want those stocks that had hit all-time high price, let's say back in 2010. Okay, we don't want that, because if a stock has not recovered in the last 15 years, then the odds of it recovering now is very, very low in my view. You never say never in stock market, but still the chances are very, very low. So how to find out those stocks that have been recently beaten down is the question here. So for that, what we are going to do is we are going to add another condition here. So we are going to come down here and say end. Give me those stocks that are down from 52-week high. So last 1 year, those stocks that have been down by more than 50%, that will give me the recent data for the last 1 year. If I run this query now, I'm going to get much lesser number of stocks, which is around 1232 stocks. Again, the list of the stocks does not matter here, but this is the step 1 to find out the stocks which have been beaten down from their all-time high price. Now, after this, the second step that I'm going to do here is that I'm going to apply another criteria here, which is the market capitalization. So market cap of a stock, I want it to be at least minimum, let's say 2000 crore, right? Now, again, your choice whether you are comfortable with 2000 crore or if you want to go, let's say 5000 crores or 10,000 crore or 1000 crore, that is again your choice. I'm comfortable with 2000 crore. So let's run this query here, and now we find only 74 stocks. Now what this filter has done is it has got rid of those stocks that might be penny stocks or very low market cap. Here we are talking about at least some size of the company that we can deal with. Now comes step number 3. So for step number 3, again, I'm going to write another end condition and say that the pledged percentage here should be less than 10%. What is pledged percentage? Meaning what percentage of shares the promoters have pledged is what we need to find out. And I don't want to go with any company where the promoters have pledged more than 10% of their stakes. Now, why 10%? I'm comfortable with 10%. You might go with 5%. You might go with 7%. The idea here is that we are not going to pick up a company where the promoters have pledged more than 10% of their stakes, because that becomes more riskier. The pledging is never a good thing in stocks. But of course, there are some legitimate reasons sometimes where the promoters might go for pledging. As long as it is limited, we are fine with it. We are still taking a risk, but then we are talking about beaten down stocks here. Therefore, it is not going to be a very, very clean stock as such. So what we are going to do is run this query and find out how many such stocks where the pledging is less than 10%. Now 62 companies where the pledging is less than 10%. This is the list we can work with. Step number 4 that we are going to follow is extremely important. What we want to check is when the stock has been beaten down, what has FIs done? What has DIs done? What has promoters done? Have they really sold the stakes? Because it will tell us whether there is a genuine problem in the stock, because DIs, FIs and promoters, they know more than what we know as retail investors at many a times. So what we are going to do here is that we are going to put another condition. So we are going to say and we are going to look at first DI holding plus FI holding, and we want the total percentage of this to be at least 5%. That gives us some confidence that at the time of we running this query, we know that the cumulative holding by DIs and FIs is at least more than 5%. They still have some stake in the ground. Now, if we run this query, what we are going to do is we are going to see some reduction in the stocks, but this alone is not enough, because just imagine a stock that had total DI holding plus FI holding at around 25%. And in fact, DIs and FIs have sold around 20% out of it. We want that to be captured. With this query alone, it will not be captured. So how do we capture that? So that's very, very simple. What we are going to do is we are going to say DI holding changes. Okay. So this is the DI holding changes in the last quarter. So this is very recent change, and this should be less than 2%. Okay. Likewise, what we are going to do is we are going to do change in FI holding. Again, let's go ahead and have a look at that to be less than 2%. And lastly, I want to make sure that from a promoter's perspective, the changes. So we go changes in promoters holding 3 years. I'll tell you why I'm going for 3 years, should be less than 2%. Now, why 2% and why holding 3 years? Because promoters, they will sense the problems or the stress areas within a company much earlier than DIs and FIs. And the first person to sell a badly beaten down stock will be promoters. We don't want to see promoter stakes that have come down in the last 3 years. We don't want that, right? So as long as they have not done the selling in the last 3 years by more than 2%, then we are okay with that, right? This is an extremely important parameter. A lot of groundwork for you, DIs, FIs and promoters have done for you, right? Therefore, what I'm going to do is run this query here. And now we see 27 stocks on my screen. These stocks where DIs and FIs and promoters have maintained confidence. Again, it doesn't still mean that we should go and look at these stocks as investing thesis, but it has got rid of many badly beaten down stocks. With this, let's move to step number 5, which is to look at the valuations as well. What we don't want is that a beaten down stock is still trading at a high PE than the industry PE. That would be a disaster for us to pick a beaten down stock. What I'm going to do is I'm going to put another end condition here and say that the price to earning ratio here, so price to earnings ratio should be here less than the industry PE. We want to make sure that we only get the stocks that are trading at a below industry PE level. If you run this query, again, we are going to get rid of few stocks. Now we come to 12 stocks that have managed to come into our list. That makes a lot of sense in my view. Now we need to find out that out of these limited 12 stocks, which stocks are going to make more sense. And for that, we are going to execute step number 6. Screener's job is done. We are now going to look at the individual research on particular stocks. We are going to find out what is the root cause of this fall and what are the future prospects of this stock to bounce back. This is the most important step because here I am speaking about individual research of that stock and try to find out what is the root cause really. So let me give you a practical example of IndusInd Bank, which has recently fallen. By no means it's a recommendation. I'm picking up this as a case study only so that you understand how to practically go and research a particular beaten down stock. You are going to learn a lot with this particular case study. So what you see on my screen is that IndusInd Bank on 10th of March came out with an official statement. First thing please note is that I'm saying official statement. Please make sure that you're not relying on any media news whenever you are doing research about the beaten down stocks, because media news may include rumors. What you need to do is go to the official statement of the company that the company might have released. If they haven't yet released, then please wait for it. Don't be in a rush to go and invest in a beaten down stock unless you understand the root cause that is given by the company itself. So here, for example, 10th of March, they came out with this statement. And what was the summary of this? That there are some accounting discrepancies that the company has found themselves. And what they're saying is that because of these accounting discrepancies, their net worth was declared 2.3% higher than what it actually is. This is what their internal review is saying. And now we understand the root cause and the scale of the problem that the company is saying. So the immediate question should come in your mind is that, is this company now going to fall or bankrupt or go into administration or going to lose everything that they've built over a period of time? For this, what you need to do is look at what the regulatory bodies are saying in this particular example. So for example, what RBI came out with a statement on 15th of March is that there is no problem as such with the IndusInd Bank's liquidity coverage ratio and things like that. It means the bank is well capitalized. So the chances of this going down badly is very, very limited right now, as RBI has come out in public and has made a statement here. However, at the same time, what RBI has done is it has laid down here the timeline that by Q4 FY25, bank must complete this analysis and must actually take some remedial action. This is the timeline that the RBI has set. This is very, very important for us to know what is going to come up in the future as well. Now, after RBI's statement on 20th of March, IndusInd Bank came out with another official statement saying that they have now engaged or appointed an independent professional firm to now conduct a comprehensive review. So what is going to happen in the next few weeks is that there is going to be a comprehensive review done by this independent professional firm, and they are going to tell exactly how much is the damage, what are these accounting discrepancies. So right now, if you ask me, there is a lot of uncertainty in this particular company. We don't know what is likely to come out of this comprehensive review. Now, there are two types of investor. Investor A may say that, you know what, I want to avoid this stock up until I get the full clarity of what the hell is going on here. Investor B might say that, you know what, I don't want to wait until then because right now the price is down because of uncertainty. The moment everything becomes clear, then the stock price may not be what it is right now. So the both investors have their own mindset, and here the investor who is more experienced will know that this has happened with many other banks and this is how they came out and this is how long it took for them to come out. But again, I've given you this view in terms of how to go about really going down to the bottom of the problem and trying to find out what are the future prospects. Is the company actually going to go down, or that is not the case? It's a matter of timing here where we need to wait and watch. And you might say that as an investor, I want to wait to see what is really happening here. Again, not a recommendation either ways, but I've picked up this live case study so that you understand how to go and do the research about what is the root cause of this fall and what are the future prospects of this company. With that, let's move to step number 7. And if you're just wondering that how many more steps to go, I can only tell you one thing, that if you do a thorough, comprehensive job, then you are not going to make mistakes. My intent is not not to give you substandard content. My intent is to be very, very honest with you and give you the steps that I personally follow. Therefore, please bear with me. We are going to finish very, very soon. So let's go to step number 7, which is have a look at the valuations in the sector itself. For example, if you're picking up a beaten down stock that belongs to banking sector, what you really need to make sure is that are there any other opportunities that look better than this opportunity from a valuation perspective? So simple checks you can do. For example, here on my screen from a banking perspective, PE ratio, PB ratio, PEG ratio, you can just compare these and see. Again, taking the same example of IndusInd Bank, because of this price damage, what has happened here is the PE ratio has come down, PB ratio has come down here. So the question here is that is there any other bank which is still more attractive from a valuation perspective rather than this particular stock? Then in that case, because that stock has not beaten down and still at a better valuation, why would you invest in this beaten down stock is the question we need to ask. But typically what happens is that if a stock is beaten down by more than 50%, you are unlikely to find stocks that are trading at a better valuation than this particular company. But still we need to make sure that we do this check as well. Now comes step number 8, which is the stock still falling or has the price stabilized? It's a very, very important check we need to do, because if a stock is still falling, you might catch a falling knife, as they say. Therefore, what we need to do is we need to pick a stock at an entry price which is more stabilized entry price. This is a mistake that many people make. They might have done all the good work and they end up picking a stock at a very, very wrong price when it is still falling. So for example, here, have a look at my screen. You will see in this particular stock chart, what you notice is that the stock price almost stabilized between 300 to 400 level for almost a period of, let's say, 4 to 6 months. This is a good period where the consolidation has happened, and more importantly, all the bad news by now would have been out of the way. Some clarities would have emerged if the stock has been beaten down. This stabilization period is extremely important for you to wait and watch. Don't be in a rush to just pick a stock because all of a sudden it's fallen by 20%. You don't know, it can fall by another 20% or another 30%. It is extremely hard to judge the bottom. The only way to limit your downside is to look for the stabilization in the price. I've shown you this example here so that you understand what I mean by stabilization. Now comes my step number 9, which is the rating agency's view. So when a stock has hit some bad problems, what happens is the rating agencies will start to review the ratings that they have issued. For example, here in the case of IndusInd Bank, CRISIL, they are still holding off in terms of giving them a downgrade or upgrade. It's an important parameter for you to see how many rating agencies have covered that particular company and what are they actually saying. You will get a very, very good insight from what the rating agencies are telling you. Again, I've taken this example here. For example, CRISIL is holding the rating for IndusInd. They really want to see what comes out of these investigations that the independent firm is going. Another rating agency here, Moody's, what they're saying is that their base credit assessment rating, which is BCA, they are potentially going to downgrade depending on what comes out of these reports. So again, this gives you a sense in terms of where the market is sentimentally playing these, because the moment rating agencies downgrade the companies, there typically is a sell-off, right? And you don't want to be caught up into that sell-off mode. What you want to do is make sure you're reading these agency ratings as well to get a complete picture. And finally, my step number 10, which is the overall sector exposure that you have. So if you're picking up a banking stock and if you've done the thorough job in terms of going through all these 9 steps, the last question you need to really ask yourself is that, am I overexposed to the sector that I am going to pick this stock from? So for example, if banking stock you're going to pick up because it has passed all the 9 steps, is your portfolio overexposed to banks or not? Very, very important portfolio level balancing you need to do. Typically within a sector, you don't want to be exposed by more than 25% is a good thumb of rule that typically I use, and I've seen many other people using it. So I've sort of copied this from many other people, that 25% is a very, very good thumb rule, that you shouldn't be really having high exposure to one sector. There is a lot of risk. All of a sudden things change, then you're likely to lose money. So please make sure you do step number 10, which is what is your overall exposure and do you have room to add one more stock, is what the call you need to take at your portfolio level. Just before I finish the video, I teach all of these practical insights on my YouTube community. If you're not yet a member and want to get daily insightful updates and learning in a practical way, you can consider joining my YouTube community. The feedback of this community has been excellent. Simply go to my channel, find the join button and be my guest. I hope you enjoyed this video. If you did, press the like button. I'll see you in my next video. Until then, keep rocking.